We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. This is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because around the election period and the year afterwards, they all have to refinance, $10 trillion of debt. That period of massive liquidity tends to debase currency. We're seeing China coming out with the cowbell, more stimulus. The US has started the rate cut cycle. That's going to come down a lot. The EU have started. The UK have started. Everybody started.
Last week, the People's Bank of China cut a key short-term interest rate and announced plans to lower reserve requirements for banks to their lowest level in at least 6 years. PBOC Governor Pan Gongsheng also unveiled measures to support the struggling property sector, including reducing borrowing costs on up to $5.3 trillion in mortgages and easing regulations for second home purchases. Additionally, Pang stated that the PBOC would inject at least 800 billion yuan in liquidity to support the stock market and is working on a market stabilization fund. According to Rio Vision founder and co-CEO Raoul, this is just the first wave of a significant liquidity injection that central banks are expected to initiate globally next year. Pal compares this liquidity boost to more quantitative easing, predicting that within the next 12 to 18 months, central banks will need to inject unprecedented amounts of liquidity into the global economy to prevent a collapse and sustain growth. Following China's announcement of its substantial stimulus packages, the Shanghai index rose by 3.61% on Thursday, while Hong Kong's Hang Seng index jumped 4.16%. Pal is optimistic that similar gains will be seen in global stock markets and other financial sectors once other central banks implement comparable measures. He believes that while all financial markets will benefit from the upcoming liquidity injection, tech stocks and cryptocurrencies will emerge as the biggest winners, ushering in what he calls the banana zone.
So, I've talked about this at length about the everything code and how the entire economic machine is now driven by one key thing, which is liquidity. And that's now driving the business cycle. Liquidity became the most important thing in the world after 2008, when we had a global debt reset, but not how people expected. We had it by them forgiving all interest payments for a number of years. So everybody reset their debts, didn't have to pay interest, and everybody reset their debts at a 3 to 5 year time horizon. That's all the major governments in the world, from China to Japan to the US, the UK to the EU to Canada, everybody. And since then, the world has been on this cycle. Every time you refinance the debts, they add liquidity in. Now, the use of liquidity i.e. debasement of currency, to pay for the interest payments on all the debt is the thing that causes assets to go up, because the debasement is actually lowering optically the value of fiat currency. So it's a bit of a mind trick, and people don't see it and don't understand it. But this is why markets go up. And then, over time, I've looked how cyclical this is, and that it repeats, and we can forecast it into the future by using certain forward-looking indicators as part of the everything code. And everybody should go to my YouTube channel, see that video. So Raoul, the Journeyman, see the video of the everything code. It is 2.5 hours long, but it is the most important thing I've ever put out. And so what we get is, bizarrely, it breaks down pretty much by year, not perfect, but so 2022 was macro winter. We had inflation. We had recessionary conditions in all markets. It wasn't called a recession in the end, but regardless, everything went down and everything went to shit. Next year, spring. What happens in spring? You get shoots of recovery. What happened? Tech stocks, crypto, things in secular trends did really well. But the business cycle remained low. So the forward-looking things, the things that are driven by liquidity, which leads the business cycle by a significant period of time, had started to recover. Then you get into macro summer. Macro summer is when the economic machine starts firing up again. And that lends to another acceleration in markets and growth, whilst inflation tends to be falling or subdued. And that's a really lovely period because you can make money in pretty much everything. Commodities go up, gold goes up, small caps go up, crypto goes up, tech goes up, everything goes up. And that's where we are now. And so that summer period, the real footprint usually accelerates around the US election and after it. And that's when most markets have their best performance. So there is a seasonality around elections, which you tend to get strong first half of the year or first part of the year. Then it tends to be a bit more sideways, which we had in tech and we had in crypto, and where the rest of the market started playing a bit of catch up. And then you get the acceleration that goes on for the end of summer straight into macro fall, which is 2025, when really the best gains come of all. So that's where we are. So back then we were just starting. Now what happened? Crypto went on a massive tear, then had that sideways consolidation. Tech had a massive tear, had a sideways consolidation. The rest of the market's now catching up. And the next phase is the money shot.
During the discussion, Raoul Pal explained that liquidity originates from central banks and governments injecting money into the financial system, which is the main driver of global financial markets. In the U.S., liquidity injection is monitored through Fed net liquidity, comprising three key components: the Federal Reserve's balance sheet, the reverse repo market, and the Treasury General account. Currently, the Fed is still tightening its monetary policy, meaning it's retaining its funds. Once the Fed begins to inject liquidity, money will flow into the system, reducing the purchasing power of fiat currency. This ongoing debasement is why analysts like Pal emphasize the importance of investing in financial assets, particularly cryptocurrencies, which have historically outperformed other markets and are seen as essential for preserving and growing wealth over time. Now let's return to Pal's interview for more insights.
Right, what they're actually doing is devaluing the purchasing power of money by 8% a year, which is the increasing global liquidity. But most people don't understand it. What happens is you have a savings account, you think you're doing all the right things, and suddenly you still can't buy a house. And you still don't buy much, you can't buy as many shares of Tesla as you wanted to, and you still can't buy as much gold as you wanted to. And you're like, why? I'm saving money, I'm working hard, but I can never get up the ladder. That's what the basement's about.
Yeah,
so
that too.
What it's done is cause everybody to become a risk taker. And this is an important point. So really, of all the assets that we monitor at Exponential Age Asset Management, there are only two that beat the 8% debasement plus, let's say, 2 or 3% global inflation. So 11% is the hurdle. The S&P keeps track of it roughly. The NASDAQ does 17% a year return since 2011, and Bitcoin does 140. Gold doesn't meet it. Almost nothing else meets it. So you're really herded into two assets only that can actually beat this thing and make you money. So your future self gets wealthier. People have been incentivized to do that. Now, you might say, but this is crazy because people are taking such risk. But there's another piece of magic that happened is the Federal Reserve and the government understand that this is the case, and they understand that we have a lot of debt, and we understand that the collateral of the debt is the savings and investments of the population. So they don't allow it to go down much. So if you saw it last time, the S&P got down 30% in 2022 and liquidity came back. So they've stopped markets falling 50, 60, 70%. Sure, different stocks can, crypto, because it's not really a big part of the collateral system, but they don't allow the collateral to fall. So what they've done, what it means for all of us, is they've taken the big risk out. We've talked about the Fed put for years, but we didn't really understand what it meant. What it is for is, listen, if you've got a lot of debt, your collateral is what you pledge against the debt, right? The whole system is built on this. That's what blew up in 2008 because the house prices went down and everyone's loans were this high. But if you think of the whole system, all the banks and all the asset management firms and all the leverage and all the private equity and all of the stuff, they don't want the equity to go down. because that's the collateral. They allowed the bond market to go down because in the end it gets repaid. So it's a mark to market loss. But in equities, when you've got this massive retirement system, you just don't want that. So this Fed put is part of the everything code where they've just stopped that event. So they debase currency to erode the debt, make the interest payments, because if not, they'd never be able to pay the interest, because you'd eat up all of GDP growth just to pay this interest, because it's 100% of GDP. And they stop the big bad event. So what that gives you is the greatest macro risk-taking opportunity of all time. Doesn't mean the business cycle's gone, but overall, you've got the best risk-taking cycle in history.
Hello guys, welcome back to my channel. Today I am back with another new video, in which video the CEO of Real Vision company by Raoul has discussed about cryptocurrency like Bitcoin, Ethereum and American financial system. In this video, he has briefly discussed about future financial system and current financial system of USA. So guys, if you like financial content like this, you can subscribe my channel and watch every video daily, because I upload this type of video every day. Basically I upload Bitcoin related content. So guys, if you are Bitcoin investor, then you should subscribe this channel, because I upload interview of great Bitcoin investor and Michael Saylor Raoul and many other investors. So I hope all of guys are enjoying this video. If you think this video is useful for you, so please give a like and share to your friend circle.
I got supplies.
So guys, please like and subscribe my channel. I will be back with another video next. Bye for now.